Good evening, my friends and the investors. Today, I'll speak little bit on the educational of the stock markets, and obviously, in the end, I'll give some tips on the Morepen laboratory. It is not that tips, restaurant tip 10 rupees, 20 rupees tip, not like that, but the tips where the people or the investor who generally they want without learning the fact. But once you want to get some tips, you must learn. Then if you listen my learning sessions, then only I will give tips. That is my motto. Okay, friends and investors, especially new investors, I'll speak regarding bonus issue, split of equity in a company, as well as the right issue. Now, let us start with right issue. Now, what is right issue in a company? When the company grows and requires some capital or sum total of funds it needed for the capital expenditure, mainly for expansions, it will issue further equity to the existing shareholder under section 81 subsection 81A. In the same proportions, the shareholder held the equity into the company. Now, prior to that, I'll speak little bit the face value. Face value of equity, suppose I take as rupees 10, that means 10 rupees shares going to be issued further by the company to the existing shareholder at a price rupees 10 or higher than rupees 10, say 30 or 40 rupees. If we go back to the many years back, at 30 rupees premium, 10 rupees share were issued by the Morepen to the existing shareholder in the ratio 3:1. That means those shareholders held shares for each 3 share. They had only 1:3. That is, for every 3 share held, they received 1 share, or they were eligible for subscription into the company at 40 rupees, 1 share for each 3 share held. For simplicity, I take, suppose I held 300 share, then I could subscribe at 40 rupees of rupees 10 equity in the Morepen. I subscribed already, and if I was holding then 330 share I think, and I subscribed 110 share around. For my share I held on that date, that is on the offer date, that is there is a like record date. On the record date I had 300 some shares. I suppose 330. I subscribed 110 share at rupees 40. That time it was 10 rupees shares. And after many years, the company split it. Now, what is split? When the share price went with much premium into the market, that means its price went up 300, 400, 500, 600, 700. Now, company decided after a few years to split the shares. Right issue, I think you have understood little bit. The commerce background, the knowledge, the person having knowledge into the commerce, or those who are in the commerce graduate and other professionals study regarding the company and the commerce, they already understood. And other person, I will expect that you have also understood the right issue. Now, from our side, we are the investor. We will see after raising of such fund how the company has utilized that fund. We have to check it for our benefit, like we want to appreciate about the share value, that is our portfolio value. We want the company should make expenditure, capital expenditure, that is acquiring plant, expansions, and so it is reflected through the sales in the next year or next to next year when every project completed and when the expansion took place. We can see or it is visible like the sales are increasing. Obviously it increased, and after that Morepen they split the share. Now what is split of equity? 10 rupees shares they split it that time into 2 rupees share. That means I held like 330 plus say 110, 440 shares. Then they split it the share for every one share they split it rupees 2, 5 shares. That means the 600, for assumptions I am taking 600, after split the company share price went down to 600 divided by 5, because 10 rupees one share was split into 5 share of rupees 2. So obviously 10 divided by 2, that is 5 shares. So every share I held as rupees 10 equity into the company, I received 5 share of rupees 2 fully paid up into the company. So my 440 share went into 440 into 5, that is 2200 shares. So the share price came down accordingly to 127. After that again it went up 200, 300, 400, 500, 600, 700. Company again split it rupees 2 share into 1 share. That is for every share of rupees 2 each I held into the company. Company gave me 2 share for each share. So my automatically number of share holding increased from 2200 to 4400. Now by the time I had sold also realized certain profit, because I wanted to channelize that fund into some other company. So I sold already, and in fact I am holding 1000 shares account. Now each 1 rupee share now again at a premium at rupees 500 something. Now see why the company split the shares. Company split the share on that view. These all are the public limited company where we make investment into their equity. The formula or say pattern is this: when the share price rose to higher value, then the company can go into the split, because so that the price come down after split, and the small investor, that is retail investor, they can make investment into the company. This is like channelizing the investment between small investors. So this is that view only. So small investor, they can participate also with the company grow, they can also grow. That is the idea. So right issue I told you, split I told you. Recently the Morganite Crucible India Limited also going for split, rupees 10 each share would be splitted into 2 5 rupees shares. It is record date is August, 5th August. Okay friends, now I will speak about bonus. Now what is bonus share? Now the company had a good profit, company out of profit created reserve. Journal entry, profit loss account debit, general reserve account credit. Now or the free reserve credit, or say simply reserve account credit. Now this credit balance on the liability side when expanded, asset side also expanded, but surplus, reserve and surplus had a reflections onto the working capital of the company. That is, working capital increased. Now, working capital is total current asset less current liability. Now, current asset comprises stock in hand, receivable, different receivable, cash at bank, cash equivalent, as well as advances by the company. Now, see, cash and cash equivalent become larger amount. So, company wants to expand this into the fixed asset. Fixed asset debit, that is another asset come, and this liquid asset decrease. That is the view. Now, company wants to this, so they cannot distribute the reserve as dividend. So, they want to expand, they want to grow. So, instead of giving cash dividend, company allows the equity dividend. Now, journal entry very simple, reserve and surplus debit and bonus dividend credit. Now, bonus dividend debit, equity share capital credit. That means existing shareholder in their holding proportion, they get free share of the same denomination. That is, I had 100 share, I'll get the 100 share. If I had 50 share, I'll get the 50 share. If I had 1000 equity into the company, I'll get the 1000 shares of the same denominations. Now, why company doing this? Company doing this because they want to make capital expenditure out of the profit of the company. So, internal profit is credited to capital account. That means it is capitalized. So, liquid assets also converted into fixed asset, or say current assets converted into fixed asset. So, I have spoken about right issue, split as well as bonus issue. Bonus issue means company going for further expansion, company going for further capital expenditure. So, we may see like company is growing. We can see in the past many company had issued bonus shares to the existing shareholder, and that is we check like split, right issues, bonus issue as well as the cash dividend by companies, different companies are depending the strength of the company. Okay friends, now I will speak little bit regarding the Morepen laboratory. Morepen laboratory is a very good company. They had a problems, they had faced many troubles. The price went down to 2 rupees 30 paisa even in some time back, like 18-19 years back. Now today it was upper circuit. I had holding, lot of holding into the company. Some portion I have sold out already at 30 to easy the risks. The company is good one, but in the equity market, what's happened? We are the investor. We generally split risks of one company investment into many. Sorry, friend. So it's give you not only easiness of your blood pressure, but also preserving your capital. So friends, don't depend upon tips of anyone. Study yourself, be prepared, have a knowledge on the equity markets, and then only you can get money out of the market. Giving tips to 10 rupees, 20 rupees to the waiter in the restaurant is enjoyable, and that person also enjoyable. But giving tips from my side or from any other else to you, and if you had a like depreciation after that tips you accepted, then it become BP to you, as well as like me person should feel okay, feel sorrow, but company is good. You may continue in the Morepen for next 1 year, 2 year at least, so you get the good return. But you have to cry many times. I cried also many times. Last 20 years I cried many times. You have to cry because price will go up, down, up, down, up, down. Ultimately, it may show its original position. That is, it may go back to again 112, 130, 40 or more, much more, depending upon the company's performance. If the company become bad, then it may go into the 13. 10 or single digit, the future performance is not reflecting. So please take your own decision. It is not the restaurant tips or tips from my side. If I extend to like waiter 10 rupees, 20 rupees, not that tips. It is the like tips where if you blindly accept my tips, you may suffer 10,000, 20,000 any day. If the holdings are become much more. So single day you suffer 20,000. So please take your own decision. Nothing is granted in the stock market because somebody has to lose the money that's going to the another pockets. So depending upon knowledge. Thank you friends. Good night.